the maturity decreased, right? If you see the trading history of BMN1, the initial first 12 to 16 months, that was the highest because people are speculating how many BTCs are coming. At a maturity, the speculation went down, and so the trading went. And this, I think, we tried to address in the BMN2, increasing the term and a few other elements. But I think that's definitely is one of the challenges. Second is definitely, I think, a lot of people got so much good return that they were not trading this product. So it became a hodl product to a certain extent.
That was partly kind of like the product and who was the investors too as well, right? So a lot of the early investors were kind of like, people that had a decent understanding of Bitcoin, and they were people that invested with Bitcoin on the thesis that they would get more Bitcoin. And they just naturally didn't want to sell because they kind of, had a good idea of what was going to happen. So that was certainly something very unique about the BMN. James, can you talk a bit about the returns that we saw with the BMN1?
Yeah, the returns on BMN1, if you look at it from Bitcoin to Bitcoin return, it was approximately 32% above what you would have earned if you just bought and held Bitcoin for the same period. And it was about approximately about 57% return if you invested with euros. So going in, it was $258,000 euro on average, returning about 405,000 euros at the end. So it's like Arnab said earlier, it's one of the, I think it was the best investment from a Bitcoin return perspective that we've tracked or even know of.
Yeah, that's, of course, it was kind of a really interesting environment when it was first issued in 2021, right? We had the global semiconductor crunch, and we had COVID that just blew up supply chains. The miners couldn't get equipment. We had, hash rate was, it actually dropped quite a bit with the China mining ban, and then we had Bitcoin price going up. So those were all like just kind of really fortuitous tailwinds that we had with the BMN early on, and I think explained a lot of that early volatility, right, Arnab?
Yeah, totally, because I think the Chinese mining ban was a very interesting moment because that gave an investor a good opportunity. I think during that moment of a few weeks, the mining was definitely super profitable compared to buying on spot, right? And investors got that, the benefit. But also the BMN was structured in that way, right? Because this is a product that gives you the opportunity to kind of get the benefit of the market cycle, right? Because it's a 3-year product, right? And that's how the idea of the BMN was. It provides an opportunity to participate in the full market cycle rather than just participating for 1 month, 2 months. And most of the products in a hash rate derivative space, actually till date in the market, they're very short-term product compared to BMN.
Yeah, and Jesse, I think back in that time frame when China shut down hash rate pretty much, kind of cut in half, U.S. was just ramping up, so there was a lack of capacity, and in addition to that, there was such a demand on the miners, it drove the prices way up. So getting into mining, if you wanted to mine, it took quite a long time. You could be waiting up to six to 9 months to just try to get in to a hosting contract, procure your miners, get them delivered, find the capacity, and so on. The BMN1 was an easy on-ramp to mining, and I think that drove a lot of the success back in those days.
Yeah, so what are the kind of takeaways that you guys learned from BMN1 that you've implemented in BMN2? And can you maybe talk a bit about BMN2, give an overview of that?
Yeah, well, BMN2 is a different environment now compared to back in I guess the spring of 2021, right? It's the concept of hash price didn't exist back then, right? But the industry has matured quite a bit. So now we have hash price indexes like the Luxor hash price index, and that measures the profitability of mining. So investors have a way to compare what our BMN is offering versus what the marketplace would offer as well. The hash rate in the network is at its high, right? I think that a lot of that is driven for a lot of more acceptance in the industry. Since BlackRock signed on, right? I think Bitcoin is becoming more accepted, just by a lot of the folks out there as an investment. So we're seeing a lot of demand still. There is still a lack of capacity, right? But the miner prices have come down quite a bit. So we discounted BMN1, I think it was up to, if you compare it to the current hash price, it didn't exist back then, but if you kind of simulate what it would have been, we created it was about a 60%, 60+% discount to the hash price. The BMN2, because it's different times and the hash price is so low, that we're discounting just over 50%, which is still very significant to what the market offering is. We're going in with a price of 31,000, which is about equivalent to $21.23 per petahash per day. Now the spot hash price is upwards about $45 to $47 per petahash per day. So we're at a significant discount, which we think is going to drive quite a bit of demand. The difference between BMN1 and BMN2 is BMN1 was offered at 2 petahash for 3 years. BMN2 is 1 petahash for 4 years. Now we reduced it to 1 petahash to kind of to match the indices on the market, the hash price indices. So it would be an easier comparison for investors. And the reason for the term difference is when we started BMN1, it was three years left to the next halving. Now we're at a point where it's 4 years to the next halving. So that's what justifies the term differential.
Okay, a couple of questions on the back of that. The first one is, when you mention lack of capacity, do you mean specifically access to energy?
Access to energy, with AI demand going so up, we're now competing with AI for energy out there. In addition to that, a lot of the public miners are verticalizing, and they're consuming a lot of energy as well. They're finding energy sources and basically taking it off the market, using it for themselves. So retail investors or any other investor for that matter that want to get into mining have a much more difficulty finding the capacity at a cheap cost to mine, right, to keep it profitable. So so it's become a little more challenging. And the BMN2, we're leverage Blockstream's infrastructure and the cheap energy rates that we get, and make it again, like BMN1, an easy on ramp to invest in mining again.
Kind of a higher level industry question. How does that lack of capacity, and specifically as it applies to energy, how does that get solved? Does that mean miners have to kind of get pushed out of North America and look to other geographies for energy, or is it just good old fashioned, CapEx and spending money to build the energy?
No, we're finding a lot of miners especially the public miners, are diversifying outside of US. They're finding cheap energy. The issue I find with that from a Blockstream perspective, it's you have to deal with the political land front and and any of those countries you're going into. But there are a lot of cheap energy sources. But the cost of development also goes up, right? You have to find partner organizations to help build it, also help support. So so even if you're getting energy at a discounted rate compared to the US, it seems to be made up in other type of cost and risks that you have to deal with. Now, Blockstream, we like Texas, right? We have quite a bit of capacity in Texas. We find cheap rates there. Our average rate for in our West Texas site is roughly about 3.5% with very little curtailment. And that's all in, by the way. That's tax and non-energy type of cost. So that's pretty aggressive, and it's hard to find anywhere else without all those other issues that I just mentioned earlier.
Okay, and another thought I had when you were talking earlier was, I know you're head of sales for Blockstream Mining, so you're talking to these institutional investors, and I just think back to in 2021 to some of the first conversations I had with investors. And, basically a summary, I think, of their feedback was like, we're still struggling to get our head around Bitcoin. Bitcoin mining is a step too far. Are those conversations easier now? Do you find you're making more traction with these mainstream institutional investors, or is it still kind of an uphill battle with these guys?
I think back in 2021, or there was a lack of knowledge, right?
For sure.
I think since the industry has matured, it's become more public. The education process around educating enterprises to understand the concept of mining is a lot less, right? We still go through a little bit, now, but not as much as we used to have to at this point. Now it's more the conversations are more like trying to forecast where Bitcoin is going to go or where the network's going to go, right? And profitability at the current since the last halving has been pretty low, right? So we do need to see a Bitcoin run to bring up the profitability to where it was back in 2021. And I think using BMN2, there's a lot less volatility, right? You're less exposed to downward price, right? Because if the price goes down, drops significantly, you typically see the network hash rate go down as well, which will increase your reward. So you kind of get a little bit almost of a self-healing process going in place, which will help returns. Whereas if you're holding Bitcoin, you're gonna realize that entire price drop.
One thing to add here, Jesse, because in 2021 when the BMN1 was launched, you did not have that much of institutional discussion around Bitcoin itself, right? Which is different this year, right? With this ETFs, 17 billion plus net inflows and 20% coming from institutions, people are looking into Bitcoin, right? So the market knowledge is a bit better. Second is, I think, the ESG narrative, right? After BlackRock coming into the space, the ESG and BlackRock saying they don't care about ESG so much. Somehow, I think the ESG narrative of Bitcoin suddenly looked very promising, right? People are not talking about the ESG angle, which was one of the biggest reasons for them to push out on proof of work and the Bitcoin mining.
Yeah.
Third thing, which I see is very interesting, is, and we are talking to a lot of institutions also for BMN2 right now, because they saw us pestering them over the last 3 years, talking.
You've got a track record, which is super rare.
Exactly. Now there is a track record of the product for 3 years. They had a positive return. There is opportunity for liquidity, which most of the product doesn't have. There is a very strong brand like Blockstream. The product is issued from some of the well-known jurisdictions like Luxembourg with ISIN number. So there are a lot of key pieces of the puzzle are present, right? So I see this time maybe it's a bit different, and I think, as James mentioned, also the pricing is very attractive, right? To get such a discounted hash price is very hard for them. So all this, and then on the other hand, we have the BMN1 investors, right, who have got paid out 80 million plus, right? They're also quite keen. So now there is some very interesting market momentum. So I think if it's the right direction, we can bring the conversation. This product can cross 100 million plus AUM in a very short duration.
Correct. Now, Jesse, if you think about the, I guess we call them alternatives, right? From an investment in alternative, you can invest directly in BTC and hold, right? Which we have shown that BMN has beat, 32% plus. You could try to sign up for a complex hosting contract, which would be locked in for long term. Deal with getting machines and machine failures or machine degradation.
Counterparty risk.
Yeah, so you counterparty risk, all that. You also can buy hash rate contract on the open market, but generally you only see hash rate contracts upwards of 6 months max. Occasionally you see them 12 months. The BMN2 is basically a 4-year hash rate contract locked in at a price well below the current market spot price for a hash rate contract. So it's so the alternatives I feel don't even compare to what this product is offering.
Yeah, that's interesting. And also, I guess one of the original arguments was that it's a pure Bitcoin mining play, right? Too, as you mentioned, a lot of the listed miners, they go in different directions. They mine Ethereum, or they do AI, or do other things. And if you just want exposure to Bitcoin mining, this seems like a pretty easy way to go. And you can scale it too, right? So I imagine there's investors out there that want to invest in Bitcoin, and they, have different levels of kind of their ticket size. So it's available to a lot of different people.
Yeah, well, in addition to that, if you were to sign up for a hosting contract, you don't have any liquidity, right? With BMN2 being tokenized and being able to trade it on Bitfinex, you have that liquidity, right? And now,
as Arnab, as we discussed before, there wasn't a ton of liquidity, but there was an order book there, right? There were bids and offers, and you could get liquidity if you wanted it. But
true, but I think more people are educated now, right? They see the success of the BMN1, but the offering price that we're going in at, Jesse, is below the market. So you're in the money as soon as you're buying it, right? you're right. If you were to, sell the token on the open market comparable to the spot hash price,
Yeah.
you're seeing a return right away, right?
Yeah.
So I think people have become smarter, right, through education. I even see government, politics, being an election year. I think every side are taking a position here, right?
Yeah.
I think back in 2021, it was a major concern that the Bitcoin industry was hurting the energy business or energy
Yeah.
practice. And now I think that misinformation has gone away, and they kind of see how Bitcoin mining actually helps balance the energy, especially in the Texas environment. So there's a lot of reasons why this is different than 2021.
Yeah.
With BlackRock making the investment in this, and you have and them speaking quite a bit about it as well. You have a lot of folks more willing to accept the risk of Bitcoin, right? And
Yeah.
and if you also compare investing directly into a mining company like a Marathon or a Riot or whatever, those folks are they're diversifying their portfolio a bit from a product perspective. They're not just mining any longer.
Yeah.
Some are getting into the AI business and other type of products. I think Marathon is actually has a layer 2 now, or they're doing quite a few other things as well. So you're exposed to the risk of the success of those products by investing directly in those companies that that could challenge it. And you're also exposed to any kind of degradation of their mining fleet, right? That it could hurt hash rate, and any kind of machine failures and the time to recovery and all of that, and also any increase in energy cost. With the BMN2, you're locked in for the 4 years, right? So those risks have been taken away. So we feel BMN2 is a much safer investment than investing in some of these public miners.
I think one thing, James, maybe also the buffer, the cushion hash rate, right? Or the buffer hash rate, right?
Yes.
So I think the BMN1 was giving 10% of buffer hash rate. That means if in any situation the hash rate drops below 1 petahash per BMN, here Blockstream is committing to provide a buffer of up to 50% of the hash rate. That means they have the equivalent of ASICs in the reserve, which can be plugged in. And maybe, James, you would like to explain something on that. So,
well, it's kind of like a 100% hash rate insurance, right? Because we're keeping 50% buffer, right? So and that's quite a bit of buffer, right? So if we have machine failures, we can back it up with the 50% additional inventory that we have to plug in, so time to recovery would be quick. So in essence, you're getting very close to 100% hash rate assurance on your investment. So I think that's something that is much different than mining yourself or any other type of investment. Is getting that kind of assurance in there.
Arnab, one of the biggest kind of challenges we had with the BMN1 back in 2021 was the high minimum ticket size. What will be the minimum ticket size on this investment on BMN2?
So for the non-professional investors, non-US investors, it's around 115,000 USD. But if you're qualified as a professional investors, and we are qualifying it with our partner in the European market, then in that case your ticket size will be USD 10,000. Right, that's a starting point. In definitely secondary markets, once you get listed with likes of the platform like yours, definitely I think maybe it's better you share, because I think that's also I think the market also changed over the time, right? I think Bitcoin securities also now have a lower minimum ticket size, right? And this is, I think, can be also leveraged in the future.
Yeah, for the BMN1, it's either a minimum ticket size of $100,000 equivalent, or later we did have a professional investor designation as well. So if you get deemed as professional, meaning you've got appropriate education, experience, and in our jurisdiction, it's only $100,000 of investable assets, then you could get deemed as professional. And that means you could invest in kind of any size in the primary or secondary markets. So I think that's another big structural change, because that's important to getting like the yin and the yang of markets, where you don't just have the super high net worth Bitcoin guys that just want to hold their Bitcoin. You get retail guys that want to make a punt, they want to come in and out, and you get different investors with different investment theses and time horizons. I think that's really important for liquidity. And it sounds like that's a big structural change for BMN2. Arnab, to wrap things up, I wanted to talk about CMSTR. Could you talk about, what that product is, how it developed, and maybe give us a kind of introduction?
Yes, CMSTR is a very interesting product. It got launched in May. As you can imagine, CMSTR means some form of wrapped MSTR or MicroStrategy stocks. C stands for 100. So one CMSTR equals to 100 MicroStrategy stocks. So what happened here is we issued a tokenized version of MicroStrategy stocks that represent 100 MSTR. And why? The question is why we did that and why we thought that could be interesting. The MicroStrategy stock has became correlated with Bitcoin because Michael Saylor is buying constantly Bitcoin whenever he's getting some cheap borrowing opportunity, right? So effectively what happened over the time is his stock price or MSTR stock price became very much correlated with Bitcoin. But it is not possible to trade MSTR against Bitcoin in the public markets. You can trade against Bitcoin futures, but that's not very accessible for a lot of people. So we thought, okay, why not? There is the product where actually you can trade MicroStrategy against Bitcoin. And we also got some inbound requests. Some investors or some initiators wanted to actually have such product. We looked into it, how to do it, and STOKR infrastructure is very scalable, so we can bring any kind of financial assets. So we used our infrastructure to tokenize that asset, and that got launched in May. The product got very interesting interest in the market already. It's right now around 7 million AUM in subscription. We did not see any redemption yet, but there is also trading volume is happening because we see on sites how people are doing peer-to-peer trade based on the whitelisting and all those logic that I mentioned before. And the product has a very interesting angle because let's say, for example, on Friday, the Bitcoin price falls. You cannot trade MSTR after the closing hours. But still, Bitcoin is live 24/7, right? In the weekends, they're trading. So a lot of traders can actually find a different, trading kind of strategies, and they can make a Bitcoin positive gain, or they can also have a Bitcoin loss, but they can also get a Bitcoin positive gain. And this is something we are seeing quite a lot actually in the trading books. People are trading on the outside the operating hours or outside the usual trading hours. And that's kind of very interesting angle because it's a product is more, and I think there's more and more products you will see also STOKR in this kind of sense. The companies, because I was actually at Nashville, and I see a lot of companies now are in the direction of having BTC in the treasury, right? Following the MicroStrategy playbook. And those products can be very interesting product for the Bitcoin specific audience. And as Liquid is a Bitcoin infrastructure, technically, it makes perfect sense to have it.
What kind of companies do you see putting Bitcoin on their balance sheet?
They're interesting. Before MicroStrategy, I was always thinking it's much more the cash flow positive business, right? Which is trying to manage a treasury. But we also saw MetaPlanet now, quite interestingly, in Japan. This is a company that was kind of on a shelf for some time. Now they're coming back and they're aggressively buying Bitcoin using a very cheap borrowing rate in the Japanese market, the yen market, right? And they are kind of issuing shares to buy Bitcoin. So technically, effectively, at some point, you will have a Bitcoin basis, trading value. We also see, I was in the US, I also heard about the Fold, a company that is going via SPAC. They're also having Bitcoin in treasury, right? So it's not only, I would say the cash flow positive business or a company that is coming out of the shelf and coming back, but also startups doing it. So it's in different companies coming in, and that's interesting. And I see there's a huge opportunity. What interests me, and this is very interesting, Jesse, is I see a huge demand in the US market and understanding. But being in Europe, I don't see that many companies are playing that game, right? Maybe at some point, STOKR may do it if nobody does it, that's for sure. But I see this is a very interesting opportunity. A lot of companies can do it in that sense.
How do you explain that attitude? I guess that traditionally we kind of look at European investors as a little bit more risk averse than Americans. Is that, do you think, what explains it?
I think that one. The second is over here, the concept of treasury is very conservative, right?
Okay.
People still rely on the banks heavily, right? And this is, I think, the predominantly people think there's a depository guarantee scheme actually protects them, which is theoretical, right, on paper. But that's, I think, the understanding of the risks. I think it's different understanding here, right? They much more in European market understands they like more debt than the equity product. And the public market is not, but debt has also equal risk, right? Debt can also be kind of in that way in the risky zone, right? But this is, I think, kind of pure understanding of the market risks and the appetite of risks, which I don't think is complete rational, but that's what it is, what can be done.
And Jesse, I think with the introduction of the ETFs, the better education that's been in the market recently, if we see less volatility in price, I think you're going to see more large institutions start holding Bitcoin on the balance sheet. So I think it will come. And when that happens, it's just going to create a super demand, which I think will just drive the price up quite a bit.
That sounds good. I like that. Number go up. Anything else to add, guys, before we wrap it up?
Yeah, Jesse, I wanted to just go back a little bit around the BMN2 price, right?
Yeah.
We're asking investors for 31,000 for 4 years or 1 petahash. That's equivalent to 21.23 hash price. But if you relate it to a comparable hosting rate, it's roughly 4.5 cents. That's all on hosting rate, which is inclusive of energy. That is super competitive, even to the largest public miners. There's no way that you could jump into the mining business and get that kind of rate mining. So it's super, super competitive, even against the efficiencies that you see with the large public miners.
All right, that's great. Well, thank you very much for your time today, guys. I really appreciate it. And thank you, everyone, for joining the conversation. Make sure to follow us at Bitfinex Securities, at Blockstream, at STOKR _IO, and stay tuned for more discussions from Bitcoin Capital.